This is Debt Free in 30, where every week we take 30 minutes and get practical advice from industry experts about personal finance and living debt-free. Here's your host, Doug Hoyes.
It's fairly easy to get a free copy of your credit report today. Both TransUnion and Equifax will provide you with one free copy a year, and you can even apply online. Some financial institutions will also provide you with a free copy of your credit report, and there's a bunch of other services that will also offer free credit reports. We're going to talk about those. The problem is, many people get these reports but don't always know what they're looking at. To make things worse, your TransUnion and Equifax report may not even have the same content. So today, to help demystify credit reports, we're going to cover the basics about credit reporting, including what is a credit report, what's on your credit report, where does the information come from, how can I get a copy of my credit report, how do I correct errors on my credit report, and then, with that background, we'll get to the key question, what about all these companies that are offering free credit reports? Are they legit? We've got lots to talk about today, so to help me out, I'm joined by one of our Hoyes Michaelis credit report experts, Meg Penstone. Meg, welcome to the show.
Thanks, Doug. Happy to be here.
Meg was a guest way back on show number 74, and this is show number 194, so that was, I guess, exactly 2 years ago, in January of 2016. Well, I guess it couldn't have been 2 years ago because we're almost into the summer here, where we discussed the true cost of debt. At that time, Meg was the manager of financial health and literacy for family counseling and support services in Guelph. In September of 2016, Meg joined the team here at Hoyes Michaelis, and since then she's worked closely with me to improve how we help our clients through credit counseling, and she's also done a lot of work with our clients helping them understand their credit reports. So, Meg, let's start with the obvious question. What is a credit report?
It's a bit like a report card, Doug. It's a document that has information about you, your credit activity, and your current financial situation, your current credit situation. Okay,
so let's kind of break this down into pieces. So when I think of it, there's kind of like four main sections. I guess you could interpret that differently perhaps, but I'll put links in the show notes to a credit report so you can see what it looks like. But let's go through the sections. So I call the first section, identifying information. What do you call it?
I call it personal information, okay, but so it's the same thing.
We all have our own little words for everything here. So what's in this personal information section?
So personal information contains things like your name, your address, your date of birth, your employment status, your current employment status, and your past employment status.
So obviously you want this to be accurate. Why is that important that it's accurate?
Well, you absolutely want it to be accurate because if they have your name incorrectly spelt, they may misidentify you, or if your employment information is wrong, then that could impact your ability to borrow.
So you want to have that information correct. Okay. So I call the second section trade lines. What do you call it?
I call it trade lines.
Okay,
too,
good.
So
Perfect.
We're all on the same page.
So what exactly is a trade line then?
So credit or trade lines are the accounts that you have with your lenders, and each individual lender reports to your credit bureaus. Equifax and TransUnion are not giving you your scores. They're just organizing the information. So on a credit or trade line, you'll have things like the name of the lender, the type of account. Is it a credit card, which might be coded as an R, a mortgage, or an installment loan, like your car loan would be? It'll talk about the date that the account was opened, what your credit limit is, your current account balance, and your payment history. Are you up to date? Have you fallen behind? Do you make payments late?
And this is important because, again, the lenders use it in making lending decisions, I guess.
Absolutely. That's right.
Well, things like the date the account was opened, one of the factors that factors into your credit score is how long you've had accounts. So if something's been open longer, then you want to make sure that information is correct, obviously, because that could potentially help you. So the third section, I think of it as the inquiry information section. I don't know if it's actually a separate section on the credit report or not, but what's in that section?
That's information about who's been looking at your credit bureau report.
And, now I know, because I've been doing this a while, that there's hard hits and soft hits, or hard inquiries and soft inquiries, and they have a different impact on you. Walk us through, what's a soft hit, what's a hard hit?
Sure. So a soft inquiry doesn't impact your credit score or your ability to borrow. So when you want to check your credit bureau report, it's considered a soft hit. It's not going to impact anything. Current creditors just checking in on you or account monitoring, again, a soft hit's not going to impact you. Inquiries made by companies extending you pre-approved credit for a credit card, again, that would be considered a soft hit. A hard hit is different. That's when you apply for credit and the lender checks your credit report. That can remain on your credit report for up to 36 months, and too many hard hits can impact your credit score and ability to borrow. Some people may interpret that you're a credit seeker trying to max out credit, or that you may be having some difficulty and really needing to get some credit quickly.
Well, and particularly if you're applying for credit and being turned down, then
Absolutely.
that's really going to have a
cue,
negative
right?
impact. So, yeah, and with soft hits, I remember talking to someone from one of the big banks a few years ago, and he told me, yeah, we do a soft hit on every one of our clients, and they've got, 2, 3, 4 million clients, every 3 months. So we go in, we just check, has anything radically changed? And if all of a sudden you went from having one credit card with us and now you got 5 credit cards with a bunch of other people, then even though you're still up to date, making your payments and everything's great, maybe we need to, raise your interest rate, reduce your credit limit or whatever. So soft inquiries do have an impact with the bank you're with,
Yep.
But you're right, they don't factor into your credit score because it's not something, you're not applying for credit, and therefore it's not part of the credit score information. So, okay. The final category, I call it public records and collections information. I guess you could also call it legal information or something like that. What do we normally see in that section?
So that's things like bankruptcies or consumer proposals, judgments. So if you've been sued and someone has gotten judgment against you, that would be in the public records section. Past due accounts that have been turned over to collection agencies are in that section. And then there's very normal things like liens. So if you go and get a car loan, it's very normal for the lender to register a lien against your car. So if you don't make payments, they have the right to repossess the vehicle if you're in default. So liens are very normal.
Yeah, there's nothing wrong with a lien. It sounds like a bad thing, but you're not getting a car loan unless they register a lien against your car.
Absolutely.
It's pretty much that
normal.
simple. Yeah. So it's in the legal section. That doesn't necessarily mean it's something bad. So, okay, we know there's 2 main credit bureaus in Canada.
Yeah, those are Equifax and TransUnion.
And you already made the comment, I forget how you said it, they are the assemblers of information or something like that.
That's right.
Am I quoting you accurately there? We can play back the
close
tape
enough.
to see.
That's good.
Close enough.
Yeah.
So, okay, where are they getting this information that they're assembling then?
Okay, so they get the information from your lenders. The banks will send them data, or the credit bureaus, credit unions, or any other lender. Your Rogers may send that information over to them, and then they organize the information. They receive it and organize it.
So, there's a key point there, and this is something we talk to our clients about all the time. We don't actually provide information to the credit bureau. So when someone comes into Hoyes Michaelis and files a bankruptcy or a consumer proposal, that legal process, that legal proceeding is filed with the Office of the Superintendent of Bankruptcy. It may get into the court system if needed. It is the Office of the Superintendent of Bankruptcy, which is the federal government, that then reports the fact that you filed a proposal to the credit bureaus.
Yep.
And then when your proposal is done or your bankruptcy is discharged, we then report back to the Office of the Superintendent of Bankruptcy saying, hey, good, you're done. Here's the date of discharge. And it is they that then report to the credit bureaus. So we don't have a direct pipeline to them, which is why, and we'll talk a bit about, what do you do when you've got errors? It is the credit bureau themselves who has to be at the front lines of making any corrections in that. So, okay, I want to know if there are any errors or any other problems on my credit report. How do I get a copy of it?
So the very first thing you do is, as you said, you get a copy of your credit bureau reports. We always recommend that you get a copy from both Equifax and TransUnion because lenders may report differently on either one of them. So you can do it in a variety of ways. You can get it by mail, you can get it by phone, you can get it in person, or you can get it online. Sometimes the banks are even helping clients get information on their credit scores and credit bureaus now.
As far as I know, there's 2 banks, Bank of Nova Scotia and Royal Bank, who, if you're a customer of theirs, a client of theirs, you can, through your online banking, you can actually get it. And So that was a commercial for those two banks. I guess they should pay us for mentioning that. I believe that there is another bank that does offer something similar, but they're doing it through one of these secondary agencies, which we'll talk about in a minute. So I'll put links in the show notes to how all that works. I mean, in your experience, what is the success rate of getting these? I mean, by mail, I assume it's pretty simple. I print out the form, I, photocopy my ID so they know who I am, I mail it in. 10 days later, it shows up in my mailbox. And doing it in person, while there's only like a couple of places in Ontario, you got to go to Toronto or Burlington or wherever the locations are. So that's not a obvious thing for most people to do. Doing it online or by phone, does it work 100% of the time?
Not 100% of the time. So I've
So
tried
what are the
it myself.
glitches?
Sometimes the glitches may be your address doesn't match up with the address that they have, or your employment status doesn't match up, or I can't actually get mine. I've tried to get mine online. I had a fraud alert put on mine a couple of years ago, so I'm not sure if that was what impacted my ability to get it online for free. But
Or you've got a funny spelling of a name, or
something doesn't match.
Your address has, got a suite number or something. Who knows? And in fact, I wasn't able to get mine online either because I don't know why. Who knows? But so, and again, let's be very specific here. When we're talking about getting it online, we are not talking about paying to get it online.
That's right.
You can go through, and I don't know if you can do it with both Equifax and TransUnion. Certainly with TransUnion
Correct.
you can.
Yep.
You log in, you put in all the information, your name, whatever, and then it's going to ask you some verifying questions. What would be an example of a verifying question that it would ask you?
Might ask you where you lived 10 years ago.
So it'll actually, it's a multiple choice thing.
Yeah, it's
It'll
a
give you
multiple
3
choice.
different
Yeah.
addresses and say, did you ever live here?
Right. And you have to pick one.
Or it will, have you ever, do you have a credit card with this bank? And it'll list 3 banks.
That's right.
And in most cases I've seen, the answers are pretty obvious.
Yes.
Like it's, okay, I've never lived in Winnipeg, so that can't be right, kind of a thing. So, and it might be as part of that verification process that it gets gummed up that, if you give the wrong answer, it won't. So the both credit bureaus, Equifax and TransUnion, will also offer to sell you your credit report and sell you your credit score.
That's right.
And they cost, I don't know, $20 or whatever. I mean, my attitude is, well, if you can get it for free, why would you pay for it?
That's right. You have the right to your credit bureau files once a year for free.
And the credit report does not include your credit score. So
Correct.
if you want your credit score, then you've got to use one of these other means, like through your bank or actually paying for it. But your credit report is what we're talking about today, and the reasons that that it's necessary. So so that's kind of the background, explains the big picture on it. So let's get to the important question here. I mean, you're one of our credit report experts here at Hoyes Michaelis. You probably talk to, I don't know, a dozen or more clients every week who have questions about their credit report. And some of these people get their credit report from Equifax or TransUnion, just like we just talked about. But a lot of them get them from these free, credit monitoring services. So there's places like Credit Karma and Mogo and Borrowell that offer free credit reports. So, I mean, you see a lot of these things, right?
Yes.
Clients bring them in all the time.
Absolutely.
So, what's your opinion of them?
So in my experience, they only present a summary of the information, and sometimes it's out of date or inaccurate. And you also can't get a correction filed through them. So I much prefer to go direct. Go to TransUnion and Equifax. That's where your banks are going to check. So you want to go to the source. You want to go to where your banks are going to.
Makes sense. So what do you mean summary information?
So summary information are things like they may call a consumer proposal a bankruptcy.
That's a problem.
Yep. A consumer proposal falls under the Bankruptcy and Insolvency Act, but it is not a bankruptcy. It's different than a bankruptcy, but they lump it in as a bankruptcy.
Yeah, a motorcycle and a semi-truck are motor vehicles, but they're not actually the same thing. So, and I know that is a huge frustration with our clients.
Absolutely.
Because they come in here, they do a consumer proposal, everybody accepts it, they make all the payments, it's great, they're really happy, and then 2 years later, the proposal's all paid off, and they're going to apply for a car loan, and they go into the car dealer, and the car dealer's, oh, sorry, we can't give you this because you're bankrupt. Yeah. And they're going, well, number one, I'm not bankrupt, my thing's done, and number two, I didn't go bankrupt, I did a consumer proposal. And so I assume that's just because, again, like you said, they're presenting summary information.
Right. And sometimes at the lender level, they're looking at the Equifax and TransUnion, which has the correct information versus the summary information. So it's more when the client goes online to their Mogo or their Credit Karma account, and then they get concerned that it hasn't been recorded correctly. But when we actually pull the Equifax and TransUnion files, we see that it's accurate. Public records generally tend to be accurate. It's more along the credit or trade lines we see problems.
Okay. So you just hit on the key point there, the credit or trade line. So if you pull your credit report from Equifax or TransUnion, you look at that last section, legal information, public records, whatever, it will say, file a consumer proposal with Hoyes Michaelis on this date, proposal fully performed on this date.
Right.
But if I go up to the trade line section and I read, I had a TD Visa, I'm just giving a hypothetical example here of a bank, and it may say, you tell me, what would it say?
Yeah, sometimes we see the TD accounts marking it as included in a bankruptcy rather than included in a consumer proposal. But you as the consumer have the right to correct that.
Have you ever seen TD do it correctly? Aha. And in my experience, and, I hope TD's listening and calls me up and tells me I'm wrong, but in my experience, they have one button on their computer when they're registering a proposal or a bankruptcy, and it's the bankruptcy button. So whether you've done a proposal or a bankruptcy, that's what it shows. And I've actually talked to people at TD. I haven't in the last year or two because I got frustrated with it, but I've talked to them and they said, well, yeah, unfortunately, our system's not very sophisticated. We're still using DOS or something. I don't know. And as a result, we don't have the ability to distinguish. I said, oh, that's really interesting. So you're producing false information. It's false. It's impacting the people who are attempting to borrow money, and you don't care. Well, we're a big organization, blah, 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 blah. So what I tell people, and again, you tell me if this is good advice or not, is, okay, so you're sitting there and they think you've gone bankrupt, and you haven't. Mm-hmm. Get your actual real credit report from Equifax or TransUnion and read right down to the bottom section because it will be correct there. It's very rare.
Right. That's right. It's very rare that public records is wrong, and sometimes the lenders don't know how to read a credit bureau report.
Sometimes.
They may be new to the job.
Mm-hmm. Only been there 20 years, so they don't know what they're doing. Yeah.
So you can point them to the public record side. But even before that, Doug, I'd suggest that people, before you go into the lender's office, because that can be worrisome when you sit there and find out that there's a problem with your credit bureau report, pull them. You get them for free once a year. Pull your Equifax and TransUnion report. You have the right to file a correction if the information is wrong.
Okay, and why don't we go right to that then? So how do I do that then? So how do I find something that's obviously wrong? Okay, So again, in my hypothetical example where this bank whose initials are TD has recorded my consumer proposal as a bankruptcy, what do I do?
Yeah. So normally when you get your credit bureau file in, at the very back of it, there'll be something called a correction form, or they may call it a dispute resolution form. And you mark. It's actually quite simple. You mark who, let's say it's TD, because you like TD.
Hypothetical example.
Hypothetical.
Yeah.
You would mark in, this was a consumer proposal, not a bankruptcy. And then you provide some evidence. So we always give our clients their certificate of filing. We give them their discharge papers, and we give them a copy of their creditor's package. So it's very clear that it was a consumer proposal, not a bankruptcy. They put that in, they give their ID, they sign it, away it goes, and then the Equifax and TransUnion go ahead and do an investigation and get it corrected for you.
And so you got to be proactive.
Absolutely.
That's the bottom line. So, okay, so we've talked about that. Are there any other differences other than producing summary information, or and again, I'm talking specifically about these free places, the Credit Karmas of the world. Is there anything else you see different?
Well, I think the big difference is that Equifax and TransUnion are registered with the Government of Ontario. They are legislated under the Consumer Reporting Act. So some of these other free services may not be registered. Why does that matter? Well, the Act requires certain important things get done. So if you think there's something inaccurate about your credit bureau file or it's incomplete, the Act says that in a timely manner, Equifax and TransUnion need to do an investigation if you provide them with some evidence. So they're not just doing you a favor. They're not just being good corporate citizens. There's actually some legislation around that. So there's teeth.
Are you saying that Equifax is not a good corporate citizen, Meg? I mean, are you saying that they've had issues in the past with data hacks and other things and hidden? What are you saying here?
I say none of that.
Okay, you can if Equifax is listening, Meg Penstone, spelled with an E, you can certainly contact her and do whatever you need to do. Okay, so what you're saying, quite obviously, is go directly to the source for the most accurate and up-to-date information.
Correct.
And obviously don't be releasing your private information to anyone else. And I think, this is kind of a very key point here, and that is that nothing is free. Back on show 113, which was in October of 2016, my guest was Carrie K. Taylor, the author of the Squawk Fox blog, and we talked about Mogo, a lender that will give you a free credit score, your free credit score. And I've also written about Borrowell, another lender that will give you free access to your Equifax credit score. I'll put links to both of those items in the show notes, but let me make that point again. There's no free lunch. So Mogo or Borrowell or Credit Karma has to pay Equifax or TransUnion for access to your credit report and your credit score. They don't get it for free. So how can they pay for something and then give it away for free? Well, I know the answer to my own question. They know that your credit report is a loss leader. They give it to you for free because they know they can make money off you in the future. So as Carrie said back on that podcast, getting you to sign up for a free credit report helps Mogo because once you're in the system, they now have access to all of your data. Why does that matter? Well, because the more data Mogo can collect on you, the more they can tailor the marketing pitch to you. So think about it. The free credit place now has all of your information, your name, your address, and your full credit history. They know your credit score. So now that they know everything about you, they can send you a very specific marketing pitch. So if you have good credit, you'll get an email offering you a low-interest credit card or mortgage. If you have okay credit, well, maybe they'll offer you a higher interest credit card or loan. And if you have not so great credit, well, they'll offer you a payday loan at a high interest rate or perhaps some credit repair services that you have to pay for. They are offering you a free credit report to get the data so that they can sell you something. Now, maybe you're fine with that. Maybe you want to get loan offers by email. You don't have to take them. You can say no. But in my experience, they get you at a weak moment and you sign up for a small loan, and then over time you graduate to a larger or more expensive loan that you may not need, and maybe at higher interest rates than what are charged by the big banks. I get it. These guys are saying they will help you improve your credit score, and maybe that's true, but they're also helping you get into more debt, which is how they make money. So, okay, Meg, that was my, long soliloquy, my long little rant. Am I off base here? Am I worried about nothing? Or have you seen people who get sucked in with an offer of a free credit report and they end up, worse in the long run?
Well, Doug, you and I have had a lot of conversations about this. I've bent your ear several times. My concern is I think we have not done a very good job educating the general public when it comes to how the debt system works in Canada. In my experience, very few people realize that a creditor can charge you up to 60% interest annually according to our criminal code. And beyond that, there's actually some exemptions from the criminal code for those short-term lenders, such as the payday lenders. So when you actually annualize how much interest they're allowed to charge you, it's in the hundreds of percents. So when these leads are generated for people that may be struggling or in a poor financial situation, they may end up borrowing from these high-rate lenders and getting themselves into a more difficult debt situation. So I always worry about the education piece. I think we need to be communicating much better about this.
Well, and that's why I got you on the podcast, you see, and frankly, that's one of the reasons why I brought, you into the fold here and some other people with credit counseling backgrounds, because we gotta be explaining this. You get the sales pitch, which is only one side of it.
Right.
Not both sides of it. So, okay. So let's, finish off with some practical advice. You and I both got to have our rants there, so we feel better. And I agree with you. Payday loans are not a good thing, but let's give some actual practical tips then. So for people who are listening, when you're having a in-person credit counseling session, which is how all of them are done here at Hoyes Michaelis, what are the kind of tips you're giving people?
First thing is go and get a copy of your credit bureau report and take a look at it. It's actually quite interesting. And you want to do that well before you plan to get credit again.
And that's a key point, because if you're going to mail it away, it's going to take 10 days to get there.
At least, yeah.
And if the mortgage deal is supposed to close tomorrow and there's problems on it, you don't know. So what kind of timeline would you be looking at? So let's say, I'm thinking of getting a car at some point in the next year. How far in advance do I want to get my credit report to give me time to clean up any mistakes if there's any on there?
I'd say a couple of months.
Couple of months. Okay. So get your credit report. Let's say that takes 10 days. I mean, if you manage to get it online or through your bank, then it takes 10 seconds. But let's assume you're doing it the old-fashioned way, you mail it off. It takes a bit of time to get it. There's some errors. You got to provide the proof, send it back in. So 2 months. 2 months before.
Maybe even 2 or 3 months, because they'll have to do an investigation. So you're not in control of how quickly that investigation gets done. So you may even want to be safer and backdate it a little longer.
Okay. So don't leave it to the last minute. That's tip number 1. What's tip number 2?
Make sure you check both the credit bureaus. Some people assume that what's on Equifax is going to be what's on TransUnion. That's not true. They may actually report differently, and I've seen that happen a lot. So get them both and get them from the source, TransUnion and Equifax.
Now, you mentioned earlier that by law, they have to give me a copy of my credit report once a year.
Yep. Yes.
My understanding is that if you go online, like TransUnion, for example, and type in your information and get it, it's actually possible to get it more frequently than once a year, because it doesn't seem like they have any kind of check on it. I've talked to people who said, "Oh yeah, I got it again 3 months later," and because I guess there's no human being involved, it doesn't really cost them anything. I've always told people on an ongoing basis. So let's say I'm getting a loan 3 or 4 months from now, so I'm going to get both of them. Makes sense, because one might have an error that the other doesn't have on it. But let's say, I'm up and running, things are good, I just want to keep an eye on things. I tell people, well, get your Equifax one today, wait 6 months and get TransUnion, then wait 6 months and get Equifax. And that way you're getting a credit report every 6 months, but because you're getting from different credit bureaus, you're really only getting them once a year from each individual one. Does that make sense on an ongoing basis?
That makes a lot of sense, yeah.
There you go. So there's my free tip of the day. So, okay. So we talked about, doing it in advance, getting them directly from the source. Now, we mentioned this already, but the whole dispute resolution process. So summarize what we kind of already hit on there.
Sure. If there's errors on your credit bureau report, you have the right to correct them. Now, if you have accurate information, let's say you missed a couple of payments and that's noted on your credit bureau report, you can't dispute information that's correct, but you certainly have the right to dispute inaccurate information.
So if it's inaccurate, get it corrected. Pull the paperwork together, send it off, and get it done. Okay, so that makes sense. Give me another tip.
Again, some lenders may not know how to read your credit report correctly. So the more familiar you can be with the different sections, you could point them in the right direction if there's some.
Yeah, and the obvious error we already talked about was the individual creditor says, oh, debt was included in bankruptcy, but if you read down to the bottom, it's pretty obvious that you filed a consumer proposal. That's the kind of obvious error that you're talking about.
Yeah,
okay.
Exactly.
And so having your actual credit report when you're sitting there at the car dealership, you can say, no, take a look. You're just looking at summary information. Here's the full thing. Okay, so give me your final tip.
So the final tip is we put a lot of weight on your credit bureau reports, but creditors look at other things as well, and sometimes that's forgotten. And I like to call those factors the 3 C's.
The 3 C's.
So that's character, capacity, collateral. Character is things like your credit bureau file, but it's also other information like the type of job you have, how long have you been employed for, do they consider you as stable, or do you move around a lot? If you move around a lot, a creditor might be concerned that if you start to miss payments, you'll be hard to find. Capacity is your ability to pay. So what's your income? How many people are reliant on that income? How much debt are you currently carrying? How close are you to your limits? And how much debt do you actually have access to? So if you have 5 open credit cards and you're applying for a mortgage, the mortgage broker, a mortgage lender, may actually assume that you've maxed out all those cards. And the final one's collateral. What sort of security can you provide against the loan? So if you have a nice big down payment against your house, the lenders feel a lot more protected in that situation because they know they'll always be able to get their money out of it versus someone with just a small deposit.
Well, and you're raising a much bigger point, and that is that your credit score itself is not the be-all and the end-all. There's a whole bunch more to it. So I think what I'm going to do next week is I'm going to pull Ted Michaelis in here and get him to give us his comments on that exact topic, because I think that's a key point. So since we're bumping up against the clock here, I think that's a great place to end it. Meg, thanks for being here today.
Thanks again for inviting me, Doug.
Excellent. Thank you. Well, let me make one final comment here. And I agree with Meg that your credit score is only one factor in whether or not you can borrow. And in fact, I take it one step further with people I talk to, and I emphasize the fact that credit scores are for the benefit of the lender, not you. I mean, frankly, you could consider credit scores to be a scam. I discuss the credit score scam in my book, Straight Talk on Your Money, starting on page 48. Available in bookstores across Canada right now and online, and as a Kindle or Kobo ebook, and there's an audio version on Audible, but I'm digressing here. My point is that your credit report and your credit score is a tool that allows a lender to decide how much money they should lend you. It's a tool for them to decide how far they can put you in debt. It's not for your benefit, it's for their benefit. So don't obsess over your credit report or your credit score. If you're going to be borrowing money, as Meg said, get a copy of your credit report directly from Equifax and TransUnion, review it, and correct any errors. And don't fall for the free credit report marketing pitch. That's our show for today. Full show notes, including a transcript and lots of links to everything we talked about today, can be found at hoyes.com. That's HOYES.com. Next week, as I said, we're going to continue on with this theme of credit, and we're going to answer the question, can a bad credit score actually be good for you? We're going to pick up on a lot of the themes that Meg and I talked about today. And, spoiler alert, yes, it can, so you'll want to tune in for that next week. I release a new show every Saturday morning, and you can subscribe for free on iTunes or wherever you get your podcasts. So, until next week, I'm Doug Hoyes. Thanks for listening. That was Debt Free in 30.